The explosive new film, Flynn, deliver the truth, whatever the cost, exposes secrets behind the government's takedown of General Michael Flynn.
Flynn knew what the intel world had been up to.
He ordered the first audit of the use of contractors. This set off alarm bells.
He told the truth. He was the most dangerous person for Donald Trump to hire. They had to get rid of Flynn.
Flynn, deliver the truth, whatever the cost. Available now. Watch it today. Go to salemnow.com. salemnow.com.
Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Thursday. I hope it finds you well out there. Got a big weekend plan, maybe. Who knows? And just try to enjoy what's happening while you still can. Because as we talk about the year of chaos, definitely living up to its name as, think about this. Wall Street, very happy that the fake inflation numbers came down a little bit, right? They're happy that at least, we had jobless claims today, not 210, 222, but there was a wink and a nod in that number. And actually, maybe a lot worse than that, but it doesn't matter. Rallying on good news, really, that's bad news. Walmart had earnings out today. It was actually good. Walmart said, hey, guess what? The wealthy people are now coming to Walmart, which has helped them out as I guess we see this from time to time, don't we, Jason, when you got to tighten the belt a little bit. Some of the people, we'll say the more affluent, they'll start going to Walmart a little bit more to save a few dollars.
I guess my definition of wealthy is you don't go to Walmart. I mean, the reason you go to Walmart is to buy the same stuff wealthy people buy for less. If you're really rich, if you're wealthy, you go buy these odds and ends items at these higher end stores because they're either made better or they're fancier, they got a brand name on them. So I don't know, Joe. I think that's a comment on maybe we're having less wealthy people. Maybe that's what that is.
Yeah, and it's interesting. I don't know what Walmart's definition of wealthy people is, right? So I guess maybe I don't know. I go to Walmart when I do and when I have to. I try to avoid it. But when I do, I don't see, too many designer handbags. Let's just say that. I don't see the Gucci and the Versace's and all the other handbag people. That's typically not the sights you see at Walmart.
Walmart is like the old Army-Navy surplus story. There's only so much World War II surplus. You can only go so many decades of that. And then the cheap items, Walmart's the ultimate big business that cuts out the middleman. That's what it is. That's what the Army, Army-Navy surplus. They got it from the government, the armed forces, and they sold it directly to the people. And that's what Walmart does. It's just that there's not a lot of Army surplus. They just take this company, that company, they go direct to you, and that's why it's cheap. Because hey, if you want to sell at Walmart, you got to make your item cheap, and get it to them cheap.
Well, that's kind of the headlines today when we look at some of the other economic data. All of it came in worse than expected. We had manufacturing data that wasn't great. We had some survey data that wasn't great. So Wall Street, listen, I think we've got record highs this morning. And again, another one of, I hate to say it, but isn't that the sign of the bubble, right? Aren't we continuing to see more of these signs here that Wall Street is really trying to convince the Fed, hey, you've got to start cutting rates? And I think they're right. There's really only a couple of choices. It's either lots of bank failures and things of that nature, layoffs. We'll see how big the layoffs really are. When we get back on the other side of the break, we're going to go through those jobless claims number, because if it wasn't seasonally adjusted, It was the highest number we've seen in quite some time. So it's really kind of perplexing. Where is it really? We've seen a lot of what I'll call the affordable restaurants struggling now, and now they're talking about are we going to start seeing a huge wave of restaurants starting to go out of business? So, Jason, there's a little bit for everybody, right? It's kind of like, okay, the economy's still okay, but it's definitely, we've talked about it, it's slowing. The question, I think, now is how much is it slowing, right? Is it going to slow enough that the Fed's going to be able to cut rates? The problem is, even while it's slowing, inflation's still going higher.
We had some restaurant closures around the COVID emergency, right, Joe? And that's because everything shut down, right? But it's funny, that's all gone and over with, and now we're hearing all these restaurants having trouble. I mean, isn't that interesting, right, Joe? Isn't that interesting? That was the time for the restaurants to go under, right? You can't even do any business, right? And so what's going to save these restaurants? What's going to save these businesses, Joe? Is the Fed going to start printing money amidst higher interest rates? That's going to be the question.
Yeah, and then you had things like industrial production was down, housing starts and permits. It was really ugly, big declines. And when I see something like that, right, that gets me back to, okay, how are these rents going to go down, right? How are housing prices going to go down if they're not building them, right? I mean, that's kind of the whole thing. They were March, which was really ugly. They made it even uglier, down almost 17%. Now, when it was originally out, okay, it was only down about 10%, so a huge drop there. They were expecting a bounce back of about 8%. It came in only at 5%, and then permits, which dropped 5% in March, drops another 3% in April. Yeah, I don't know. This magical housing pricing going down, I'm just not seeing it. Patriot Radio News Hour will be back. 800-951-0592. Joe and Jason here on this Thursday. A quick look in here. Wall Street's up 80, right below, about 23 points below 40,000. The S&P's up 9, 53.17 on the S&P. The NASDAQ up 30, 16.7. The 10-year note is unchanged at 4.35. It got down to 4.30, and it's fascinating that the paper markets just want to believe, and maybe, I guess the only thing I can think of is they must know something we don't know about where rate cuts have to go, because none of this data, and again, we've been, I give you the data every day. None of it is screaming yet that, hey, we're getting ready to hit a big leg down, right? This big, massive slowdown, or inflation's under control. Matter of fact, I don't care what they said about yesterday's report. It didn't come in the way they told us it was gonna. It was hotter than that. But yet here it is. What do they know? Right? What does the bond market know that we don't? And, of course, why is Wall Street rallying? Well, because the bond market's falling. It's kind of interesting, isn't it? Crude oil's up today. Gold, a little bit of profit taking. We'll see where gold ends up here. I'm not really convinced that anything should happen. Gold yesterday closed right at an all-time high. Right now it's down $12, $23.82. Silver's higher, $29.60. Copper's off a little bit. But, boy, I got an update on copper. Everybody better look out. It is a problem with copper deliveries at the NYSE, where the majority of the problems are occurring there. But like we've been talking about, listen, this is the end of this bubble. We've seen this play out how many times? Over and over and over now, right? Go back to the dot-com bubble. then the housing financial bubble, now this bubble. Get more diversified. That's the smartest thing you can do, is get more diversified. If you've got $50,000 or more, you need to do yourself a favor and at least check out Y Refi. Up to 10.25% returns. And again, it's such a great thing. It really, truly is. This is all in private student loan debt. It sounds crazy, doesn't it? But so many of these banks and how this works and telling everybody how educated you had to be. And, of course, now, right, how many companies now are like, okay, well, maybe you really didn't need a college degree. Well, wait a minute. Did we need the college degree for the last 25 years, or you guys just made it up? Of course, they just made it up, didn't they? Right, Alan? We don't want these jobs, blah, blah, blah. And let 18, 19, 20, 21. Think about these. They were lending them $50, $60, $70, $100,000. They didn't have jobs. Right? Go out there. How many of you out there are like, well, I've got a job, and they won't loan me a cent. And yet they're going to loan these kids all this money. And, of course, this isn't the government stuff. And, the second they graduated from college, what happened? Okay, well, here's your first payment. And they're like, whoa, I haven't gotten a job yet. Yeah, they don't care. Well, here you go, right into bankruptcy, right into, ruins their credit. These guys find all of these people that actually now have good jobs. And it's a great thing. Do yourself a favor. I think you'll love what they've got to say. Check them out, investyrefy.com. The word invest, the letter Y, REFY.com. Or just call them at 888-Y-REFI-24. Now, let's get to these jobless claims, because I think for me this is kind of it. If they have any chance at getting inflation under control, it's going to be here. And we are a long way from it, right? We got to see a lot more layoffs than what we've been seeing. Now, last week, remember, they got all excited. 232,000, right? Because it's been like 210 for 15 straight weeks in a row. 210, 210, 210, 210. And sometimes it was 212 and 208, but it's 210. It went to 232. This week, it came in at 222,000. That 222. Remember 222, Jason? That was one of Jason's calls, 222. So that already gets your attention. But there was just this big, weird thing about New York. Somehow, New York had negative jobless claims. And tens of thousands. How can you have negative jobless claims, right? These are people filing for first-time jobless claims. But, hey, when you seasonally adjust stuff, that's kind of what happens, right? All of a sudden, you can have negative jobless claims by tens of thousands. Here's the funny thing. The unseasonably, so New York had by far the biggest decline. They had negative first-time jobless claims, 20, 30,000 of them, okay? Not seasonally adjusted, according to this data. Guess who had the most claims? New York. Yeah. See, problem solved, Jason. Nobody really, we just fixed it. We took the state that had by far the most claims and just seasonally adjusted it to where they had negative claims.
So a negative jobless claim, is that somebody that takes back the previous jobless claim from the week before? Hey,
just kidding.
It was a jobless claim. Let me just take that back, and I've got a job now. Hey,
I was just kidding. Yeah, I thought I was unemployed.
How does that even work? Does the unemployment office say, "Okay, give us the money back"? I don't see how that would even happen.
This is the stuff you got to believe. So this is the thing. We're not sure. We don't know. If you took New York out, right, the number would have been higher this week than last week's number. Now, that could have been interesting, right? But, again, we got to deal with seasonally adjusted numbers. So at least for this week, I don't know yet, right? So this week, I don't know. Are we truly starting to see these people with part-time work losing both jobs? I don't know. Too early to tell, I guess, Jason, in that. And then continuing claims, same thing. Continuing claims been about 1.8 million. Was about 1.8 million.
Well, something will probably get ready to happen now. Now that we have 222 out there, it'll probably we'll see some numbers move a little faster now. We'll see. We'll see what happens, Joe. You keep a good watch on all these numbers day to day. So, it's been progressively getting worse straight across the board. So, and worse yet is still the inflation, which. It's like the gorilla in the room that nobody's looking at. It's like, they say the elephant in the room. That means because everybody can't see past it. It's like the inflation is the elephant in the room that everybody's ignoring, right? It's there. Everyone knows it's there, but nobody really wants to face it, until it's stomping on people. I mean, I guess that's what has to happen. The elephant in the room has to start stomping on people, Joe, and then people's like, you know what? Maybe we should really try to do something about this inflation. But I believe the Fed really wants this inflation. This is their ticket to try to reset the table, so to speak. And I think 3 to 4 on their ridiculous numbers, 3 to 4%. I think it's going to be the new norm now.
Yeah, I think they're very comfortable right here, right between 3 and 4%. But how bad is it? How bad is it really? So let's take McDonald's. Bellwether of cheap food, McDonald's. So we know that their CEO's out, man. We're just not. They're not. They don't have the money. We've raised prices, but they just don't have the money. So they decide we're going to come up with a meal where somehow you get some form of a sandwich, fry, and a drink, okay, for $5. McDonald's says, okay, here's what they decided. We're going to do it for the month of June, but that's it because, Jason, they're going to lose money on the $5 deal. So the McDonald's franchises are like, wait, what are you doing? No, we don't want to. So they're only going to do the promotion for a month, and then they've got to get rid of it because they can't do it anymore. They can't make a meal. And then on top of that, this is nuts. Get ready to start being charged for refills at McDonald's. McDonald's is saying they are going to eliminate all their self-service soda machines. Now, it's going to take a while because you got to, right? There's lots of McDonald's, right? A lot of them are franchise-owned, and these franchises are like, dude, that's going to cost a lot of money, right? Because, you're going to have a remodel of some sort going on. But, yes, they're saying over the next 6 to 8 years, there will be no more McDonald's that will have self-serve. Everything will be behind the counter, and restaurants now, so it's already started. Certain restaurants now are charging for refills at McDonald's.
How are they going to do the 5-meal deal? So as you're talking, I'm looking. Well, I know the cheap meal. The cheap meal should be the kids' meal, the Happy Meal. So I looked at the price. A Happy Meal is $7 across the country. So you're saying that the meal deal for the adult has got to be smaller than the Happy Meal. I mean, I know there's packaging. It's the packaging. That's why it costs so much.
Well, but essentially, you got toy in there, right?
Right? It's got to be. Your food is going to have to be Happy Meal sized or smaller to get that $5. It's going to be a mini burger, 10 French fries, and a tight little baggie, and a sippy cup for $5. I mean, how else are they going to do it, Joe? If a Happy Meal is $7 with the extra bells and whistles, how are they going to do an adult meal for $5? How are they going to do that? Apparently,
they're not, right? They're saying, we're going to do it for a month, but it's going to lose money, right? They're going to lose money. Dude, did you see another barge hit a bridge? Did you see that? In Galveston, Texas? I mean, come on, how does this happen? Yeah, in Galveston, another barge slammed into a bridge into these pillars, right? You think about these bridges, right? You got these pillars, and, I mean, they're super far apart, but yet somehow, apparently now, these barges are just going straight into them.
I have my car being serviced right now, so I'm getting rides to work. I don't have the backup car yet. I've been working on getting a backup car, but so my wife's giving me the ride to work, and Unfortunately, we got behind we were just coming out of our neighborhood, and we got behind the slow lady that is also coming out of my neighborhood, and she can't stay in between the double yellow line and the white line on the side of the road. She just can't. And we thought, well, she must be on her cell phone. And she kept riding the white line on the side. Then she goes over to the middle. And we're like, what is going on? And this is being typical now. People can't stay in the lane. I understand you cutting a corner, going around a curve. You cut a corner. I get it. You hit the paint. This person was bouncing back and forth. You could have pulled her over for DUI suspicion. And I'm seeing this all the time. And I know these ships are supposed to be automated. Are the computers as lackadaisical as a human driving to work in the morning? I mean,
the computer, maybe they were texting, I don't know, running some algorithm of some sort, right? Making sure they got their pronouns right. I don't know. It just seems kind of comical now,
False scarcity, right, Joe? False scarcity. It's all about the false scarcity to drive prices and create an emergency in the economy so that when they pull off another fake emergency, the next COVID, the next 9/11, when that happens in the near future, they'll blame the fake emergency for the economic chaos that's getting ready to unravel, Joe. And you can't have barges hitting bridges and trains flipping over and ships that can't go through the straits because of a war, because the Panama Canal suddenly has no water. I mean, come on. People generally the working class citizens of the world, they're a little sharper than that when it comes to doing their jobs, Joe.
Well, how about this? The United States Postal Service now saying they're going to, on July 14th, a 25% increase on their, what they call Parcel Select offering. That's like DHL, Pitney Bowes, right? These mass mailings, 25% increase. 800-951-0592. Gold's now only down 7. 23.87. Silver's up 16 cents here. So silver, 29, almost 29.70 on silver. Look out as once again the commodities index hitting new all-time highs. The copper, grain now. The list just keeps getting worse and worse. But this morning, I got a call from one of our suppliers. They're not our main supplier, but we do business with these guys. And they called me up and said, hey, how's things going? All that kind of stuff. And I'm just like, what's up? What's up? And they have 250 XF $5 Liberties. So XF, that's a extra fine. These are coins that these are going to be even nicer than our normal ones that we carry, which are already really nice. But here's what he said to me. He goes, remember when gold dipped below 2,300? Well, I bought them then, and they're just not moving. And I said, okay, well, let's talk turkey, right? Give me a number, right? How much you want for them? Today is a day. I know we were running Indians and they were super hot. This is even hotter here. Here's what we got. $5 Liberties, 1 through 19, $6.75. Jason, that's $25 off. 20 or more, $6.70. 50 or more, $6.65 at 800-951-0592. I mean, Jason, at $6.65, you're going to get 4 $5 gold pieces for within $40 of a 20. I mean, almost no premium at all. And these are XF coins. And oh, by the way, looks like gold's starting to really pile it on now. We're here approaching $23.90 now. Take advantage of it. And plus, having fractional gold with digital currencies coming, I think you're going to be really glad you had it, because I think you're going to see a lot more people interested in trading for things that the government decides they want to start tracking.
Yeah, and you know, for new listeners, and we always got new listeners. You're hearing $5 Liberties, you know, gold pieces at the price that Joe is telling you. Just for the new listeners, if you hear a $5 gold piece, this is essentially a 1/4 ounce gold piece that was minted in 1907 or earlier. Of course, they had the Indian coins from 1907 to 1933 time frame, and then, of course, gold was made illegal. But it is slightly less than a quarter ounce of gold, and that was because they didn't want England and France to come in and grab all of our actual gold coins, which were actually spent as actual money back when America actually was a free country that actually sort of controlled its government. No, it's, they had to do away with that, but these coins still exist, and a quarter ounce gold piece, and we all know fractional gold pieces has a higher premium above spot than the bigger coins, and so what Joe is selling you today is a fractional gold piece that, I don't know, what was the price, Joe?
675, 20 or more, 670, 50 more or more, 665.
So it's still more than a $20 gold piece, but not by a bunch if you get 4 of these, right, Joe?
Nope.
Not by a bunch. So see, I don't know if we've ever had 4 or $5 liberties the same price as a $20 liberty, which is the 1 ounce gold piece that we sell. But still, this is about as close as it gets, right, Joe? This might be about as close as I've ever heard it for 4 or $5 liberties for the price of a $20 gold piece.
Yeah, when you look at it, $700, right? You're talking about $2,800. Right, and you can see like, well, wow, yeah, there's definitely a premium on that when you can buy a $20 gold piece for $2,620, $2,630. If gold ends up closing flat or actually closes up here, right, $20 gold piece is going to cost even more than that come tomorrow. But now you're talking about, man, especially if not everyone can afford 50 of them. I get that. But you're within $40, $50 of a 20. It doesn't get closer than that, especially at these prices. Maybe when gold was $300, you could get that close. But at $2,400, you're not going to get that close. This is really one of those deals where we're helping a supplier out. They made a great buy, and of course the gold market took off. But, just like everybody else, they got to turn this stuff, right, Jason? He's like, man, I got to turn it into cash. Can you help me out? And so here we are today. $5 liberties, 1 through 19, $675, 20 or more, $670, 50 or more, $665. And then copper, Goldman Sachs and Bank of America have come out with a big copper warning and a super squeeze coming in the copper markets. And Jason, they're just saying, supply and demand here. And now people are realizing, especially here in the U.S., big shortages here in the U.S. And they're talking about cocoa type price rise, which I don't know what would you do. Cocoa was like, $2,000 a ton, and it went to like $12,000, right? Copper right now is about $11,000 a ton. Could you imagine if copper just doubled to $22,000 a ton? That would be insane.
Copper is commonly found with silver, so if copper is tightening up, the fraudulently low silver prices, maybe this is why you're seeing silver push past 29, edging towards 30, because these metals are found together, commonly. And so, copper going up is once again, this is a commodities rally. We've said it many times. The things that you need to run this world are all going up. And it's not that these commodities are more valuable. It's that the dollars are becoming worse and worse in value, less and less valuable. You have to spend more dollars to buy, a pound of copper. And Joe, this is not getting better. This has been going on for years and years and years. It's just happening at a higher pace. And as we said earlier, the Fed seems like they want to try to inflate their way out of this thing because they don't have a good play currently to kick the can down the road. And when this thing gets serious and things start to crash and burn, they're going to have a false emergency to blame the whole thing on. But copper ain't going down, Joe. Gold, you're not going to use less dollars to buy gold, copper, and silver. It's just not going to happen.
Well, banks now, Saxo Bank today on CNBC, they're calling it the year of metals, saying gold, silver, platinum, copper are all heading higher. Again, silver now 35 to 37. If silver breaks 30, they say there's almost no resistance to the $35 to $37 range. And gold, they said, gold breaks 2,400. They're saying gold's going right to 26. So, there's another one, right? Another big jump. We'll be back. 800-951-0592. Just over the break, BNP Paribas, same thing. Saying gold breaks 24, look for it to go right to 26. Silver breaks 30, 35 to 37. Today, $5 liberties. And again, this is some specials are always, some are better than others. This one's one of those great ones, right? This is one you want to jump on. $675. Normally we run $5 liberties on sale. It's like $10 off. Right? So, $690, and maybe if you bought 20 or 50 or more, $685. No, we're at $675, 20 or more, $670, 50 or more, $665. Silver, listen, dimes and quarters are really inexpensive here. Dimes at $120, silver quarters, rolls of silver quarters at $240 a roll. If you're looking to add to silver, U.S. Silver Eagles, and we're trying to, I'm going to tell you right now, price will be higher tomorrow. Silver now, $29.75 now, up another 25 cents, but they're $775, 800-951-0592. And man, we talk about the copper shortage this week. But last week, what did we talk about? It was tin. The week before that, beef. This week, rice. They're expecting possible food riots to break out across the globe as the rice shortage, 90% of the rice is produced in Asia. And Jason, weather, whatever, I don't know, whatever you want to call it, but now there's not going to be enough rice out there. So what happens? Well, if you can't buy the rice, you buy the grain. Then whatever. Well, then the grain price goes up. It just seems like I don't know how this inflation comes down without a major crash. I just don't see it. I mean, look at all the stuff we're talking about.
Well, and we got to see, what exactly is going to crash, because if we still haven't, that's the whole thing, Joe. When markets crash, that's supposed to be an indication that the inflation will stop. That's actually the one good thing about a market crash is inflation should be halted. But I get the feeling that we could see markets crashing and things going sideways or going down and still have inflation, like major inflation. I think the Fed is trying to fight depressive, recessionary pressures, and because of what they, manipulated back in 2008 and with the sideways. I mean, I still remember the years of Obama who was president. A GDP up 1%, GDP up 1%, GDP up 1%. They just couldn't get out of that hole, right, Joe? And we find out, 10 years later, they printed $29 trillion and gave it to countries, gave it to banks, and floated everybody. It's like, there was a depression that was headed, a long-term severe depression, and $29 trillion solved it. So, Joe, what's going to happen this time? Are we going to have crashing and printing and inflation? Because we still had the 2% inflation all those sideways years. What's it going to be this time? 4%, 5%? And maybe the stock market loses 50%. I mean, just because it hasn't happened before doesn't mean there's not a first time, especially when you have this much pressure on upward prices. The false scarcity that's being built into this thing. And, hey, by the way, they're doing everything they can for job losses and to slow this whole thing down as far as the inflation. But they may not have a cure. This is not a Volcker moment, is it, Joe?
No, and, here you go. Tyson CEO Donnie King, a big global farm conference in Toronto going on right now, told Reuters that ranchers have been pressured in recent years. They can't afford the high cost of grain, drought, all these other things. Beef cattle herds are now at the lowest in over half of a century. saying that grain costs have come down, but now we just talked about rice. And how long is that going to be? I don't know. But he said that the high interest rate environment now is a significant headwind. They see no reversal in the cattle herds. 7-decade low. That's a 70-year low here in the United States as ranchers are continuing offloading cows to the slaughterhouses. Jason, they just simply can't afford to hold on to them.
Yeah, we've been talking about the shrinking cattle herd size across this country, haven't we? That doesn't, we saw the inflation in Russia after the Berlin Wall fell, and their herd sizes shrank, went down to nothing. It took them 30 years to get it back. So is this what we're seeing here? Inflation is taking the meat supply down. I bet the pigs. Well, you look at how many. Hey, there's a bird flu. Slaughter all the chickens. What's really going on, Joe? Well, it's
now
inflation.
they're talking about getting everybody worked up that bird flu is going to start spreading to humans and all that. Oh my gosh, could you imagine? Already, the price per 100 pounds in cattle has now hit a new all-time record high, and they're saying it looks like it's poised for another breakout that just, again, will put beef prices even higher. They're saying culling of more cows, years of drought, surging feed costs now add higher interest rates. And Jason, it just doesn't look like this is going to let up here. They don't see it. Tyson's CEO saying, hey, not in this environment. They're not going to be adding to their herds. Prices already at all-time record highs, and now they're saying another breakout to the upside's coming. There you go. 800-951-0592. How many times Jason told you? Gold's the leading indicator of inflation. It's telling you what's coming. We'll be back. Final segment coming up. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Thursday here. Oh, boy. I don't know. We may get silver to test 30 today. Right now, $29.80 now on silver, up almost 30 cents right now. Gold, $23.88 now, down 7. $5 liberties, the big buy of the day, $6.75. 20 or more, $6.70. 50 or more, $6.65. I mean, with it in earshot, $4 or $5 gold pieces in earshot of a 20. That's great opportunity. Utility silver, roll of 50 silver dimes, 120. A roll of 40 silver quarters, a $10 face roll, $240 at 800-951-0592. And Jason, Tesla, more layoffs. Tesla's got a problem here. Word is now spreading that Tesla, the amount of unsold vehicles now piling up at Tesla, more layoffs out today. Not to be outdone, Under Armour says that spending has come to a stop. They are going to authorize a huge share buyback to try to save the stock as they're going to have mass layoffs. Listen to this. They're expecting 15 to 17% decline in North American sales when it comes to clothing, saying that essentially the consumer doesn't have the extra money. They're gonna wear the last year's T-shirt, I guess, Jason. Just another one of these sites, right? I mean, man, how's this gonna work? Right? Stocks are at all-time highs, and now all of a sudden, everything consumer-related outside of Walmart, who said, hey, by the way, the rich people are coming here now, seems to be faltering.
Well, we'll see what happens, Joe. I mean, like I said, we're looking at the evisceration of the middle class, and it's possible to have high values on assets during inflation, and the people working class aren't going to be able to buy them. When things crash, Joe, I don't know. Is it going to be a major crash? Or like I said, with inflation, does it just keep the stock market up until the evaluations, the actual value of these stocks actually rise to the level of the inflated numbers they're at. If that happens, you're going to see gold do a double, triple, quadruple, because gold is underpriced. So you can see, let's just say the Dow stays at 40,000 when things are going really bad. Let's just say Dow just goes sideways. You could see gold at $3,000, $4,000, $5,000 if that's what's going to happen, Joe. And you're going to see the average person not be able to buy any of it. And any kind of free money that's floating around with the business class, the more wealthy, they're going to sink a bunch of money into this. And it doesn't take very much wealthy money to make gold go crazy, does it, Joe?
No, and you know what? I'm starting to hear this thing on McDonald's, this $5 meal. It's going to only be lunchtime, so they're going to limit when you can buy it. You can only buy it for a month. I mean, Jason, that just tells you it's messed up here. There are huge problems with the commodities that, we need food, we need energy, and it's just not working here. And here's the bottom line. Until the price gets to where they can afford it. Look at these ranchers, right? Until cattle prices get high enough that they can afford to hang on to their cattle, they're not going to have any more cattle, right? So the price got to keep going higher and higher and higher. I mean, it's insane. When McDonald's says, dude, we can't get a $5 meal, you can't do it. Yeah, you got a problem. 800-951-0592.
Three-star General Michael J. Flynn, head of the Pentagon Intelligence Agency, knew all the government's dirty secrets.
He was one of the most respected generals in the military.
Flynn knew what the intel world had been up to. He understood its funding.
He ordered the first audit of the use of contractors. This set off alarm bells.
The explosive new documentary, Flynn, Deliver the Truth, Whatever the Cost, uncovers the facts behind this scandal.
Flynn told the truth. He was the most dangerous person for Donald Trump to hire.
I find out the worst enemy that I'm going to face in my life is right here in America. They took my assessment and they wanted me to change it. And I was like, I'm not changing it.
They had to get rid of Flynn.
With in-depth interviews, archival footage, and never-before-seen personal records of the man behind the headlines.
I just felt like I was drowning.
Flynn, Deliver the Truth, Whatever the Cost. Available now. Watch it today. Go to salemnow.com. salemnow.com.